Okay, let's get going. Thanks for those of you who patiently waited until some other participant had joined. So we are going to start right now. Welcome to this webinar, Property Investing Strategies that Worked in 2021. Now delivered virtually in webinars since there's no more live events. But I think a lot of people have gotten used to it. And last year, 2020, was a challenging one in many aspects, one of which is also obviously investments and job and health and travel and many others, right? I'm gonna talk about investment strategies in this short webinar. There's nothing for sale. It's pure content for educational purposes and informational purposes only. Last year, there was also many changes in the property market and certain trends had emerged and certain strategies that used to work quite well might not work so well anymore, but new ones came up that became very popular last year and that will continue to be popular and effective and profitable, most likely this year as well. And that's the focus of this webinar here today that I'm going to share with you. For those of you who don't know me, just allow me to briefly introduce myself. I keep it very short. This webinar is only 1 hour. And like I said, nothing for sale. So I'm going to spare you all the details of my background and how poor I was and how successful that most people spend the first 20 minutes with in the webinars. And it's not very interesting. So I give it 1 minute. My name is Jochen. I'm originally from Germany. I've been in Singapore for more than 20 years. I'm a professional property investor. I have a nice property portfolio myself. I'm also doing property education, seminars, talks, and educational courses, training courses, as well as I'm marketing director in ERA, selling real estate opportunities as well. But today, like I said, nothing for sale, pure content. What I'm about to give you are forward-looking statements, so I cannot be very specific, only generic. If you want specific advice, please feel free to contact me or another property professional so that you can get the right advice and do not get reach out. Therefore, also short disclaimer, this presentation is for informational and educational purposes only. It does not constitute any investment, accounting, legal, regulatory, tax, or other advice. If you want to invest, like I said, consult your preferred property professional and get good advice or try it yourself. And always do your own due diligence. So if you stay until the end of this seminar, there's 3 things that you're about to learn or discover. Firstly, you will discover what property investment strategies work in 2021. Secondly, you will know what to do to profit from the property markets utilizing these strategies. And number 3, you will also see how you can get a free copy of my book, The Property Apprentice, How to Earn While You Learn. That details for about $25 in bookstores and on Amazon. Anybody knows this guy? Not me, the other one. Type it into the chat box if you recognize him. Yeah, some of you got it. Right? It's Robert Kiyosaki. He was the first one to get a copy of my book when it came out. He was in Singapore at the time. And he was the one who inspired me actually to teach property investment at the time, and I love passive income since then. Now, there are 3 crucial keys to your investing success. And that also applies not only to property, also if you want to invest in stocks, options, business, or other things. Right. Firstly, you need the right mentor, someone who guides you, who helps you, who advises you, who's been there, done that, and helps you to avoid mistakes and get on the right track. Number two, you gotta have the right mindset, right? If you know everything, but you don't do, because somehow up here it's blocked, and a lot of people put their own obstacle into their own way, and you have to overcome that kind of thing. And thirdly, the right method. That involves strategies. And that's the focus of today's seminar. The other two we're not going to discuss here today, but on another occasion, if you want me to, I'll be happy to talk about these as well. Now, if you've been thinking about investing in property, but haven't done it yet, then let me ask you, if not now, then when? Or are you one of those I mentioned just now who put their own obstacles in their own way? Because they always say later. I'm busy now, maybe later, or not the right time now, later. I wait till the price goes down later. Well, as you see, it keeps going up, even in pandemic times, yes. Because property is a real investment, it's a good investment. And as I always say, procrastination leads to no destination. Doesn't get you anywhere. So let's get going. Which are these strategies? Now, there can be two major reasons why people buy property. The first reason could be to look for their own home. Place to stay in, get a comfortable place, maybe raise a family, perfectly fine. And I can help people with this kind of thing too, right? Getting the first property, or if you live in Singapore in the HDB, how to upgrade to private property. But this is a different ballgame. What I'm focusing on today is this top of the pyramid, how to build a property portfolio for pure investment, property investment, not your own home. Your own home is not an investment. It's a home. You gotta feel comfortable in an investment, not necessarily. The tenant gotta be comfortable, but it can be an area that maybe you don't like, but as long as other people like it, it's good enough, right? That's what we're talking about. Property, pure investment for profit purposes, not for your own use. One of my favorite property investing strategies that I myself also use is my own money, my own property portfolio, is this one here. HMO. You might not know the term, it's quite a British term. In Singapore, we call it flat sharing. Basically, that's what it is. And where Mary asking, why is it number 3? It's number 3 because it's taken from my property investment program where I teach various different strategies. And this just happens to be the strategy number 3. There's no real meaning or grading or whatever to it. It's just my strategy number 3. So flat sharing. And why does it work this year? Because I think a lot of people have financial challenges. They might have to downgrade and maybe, you know, have lost their job or cannot afford to rent their own unit, the whole unit, like a 3-bedroom, 4-bedroom apartment anymore. But they might just want to rent a room. Or if it's not in Singapore, investment can be global. One market, for example, that I favor with my own money is also the UK. That's why also this is the UK term here, HMO. And they might work in a different city than before because they lost their job and they found a new job in a different city, but they only want to rent one room. So as an investor, that's good because the smaller the unit, and the smallest unit that you can rent out is a room, right? And not a whole apartment. So if you buy the whole house and you sublet not to one family or one tenant, but to various different ones, 3, 4, 5, 6, 7, 8, 9. There's no limit, really depends on the size of the house. And that's one strategy that has performed very well in the past and will be probably even better going forward for the reasons that I've just shared with you. So this is a brilliant strategy. It gives a very good cash flow because you have 3, 4, 5, 6, 7 tenants paying you, not only one. Therefore, you also have less risk of void. Right? If your 4-bedroom unit is empty and you can't find a tenant for whatever reason, you get 0. But if my 4-bedroom unit, 1 room is empty, I still collect 3 rents from the other 3. So less risk. Brilliant strategy. Now, last year, this has become also a subset in a different market that has become very popular last year, and it will definitely continue to be this year as well. We apply the same concept, not to a residential house, but to an office. In other words, service office, right? So we can have a large office and you rent out all these small little rooms as one office, one office, one office, one office. So you rent a whole unit with 8 offices and you sublet to 8 different tenants who occupy this small little office, each of them. It can be small companies or it can be overseas representations of companies that come from other countries that might want to have just a very small web office, either here in Singapore or in another country they choose to invest in. And because of the coronavirus crisis, the office market per se has become, well, to say it politically correct, subdued. I could use another word, but not in a webinar here. Anyway, it's not good, right? But because a lot of people have to work from home, but people still have to go to office and eventually they will return to office, but maybe on a smaller scale. And that's why this form of investment has become very popular and will continue to shine in at least 2021 and probably years to come thereafter. I don't think we will ever go back to where we used to be in 2019, that offices are cramped for these people. The work from home culture is staying. Not everybody, but partially. And offices downsize. People don't want to be in the office. Companies don't want to have so many people in one place. Working from home has become largely and widely accepted in many companies and countries. So service office is the segment that you can still be profitable in the commercial market more than in residential as well. So I think that's a very good strategy. Another strategy that will continue to be good is R2R or rent to rent. What does that mean? Well, suppose you don't have enough money and or you cannot get enough loan to buy the property, be it the residential or the commercial one, then you can simply rent it and do exactly the same thing as I mentioned just now. Can you sublet to individual, many tenants, your 7-bedroom to 7 people who rent your bedroom, or the office to 8 commercial tenants, then room by room, right? Doesn't mean you have to own it, you can sublet it. And I know people who do that right here in Singapore, both in the commercial as well as in the residential market, right? So the rent and sublet. The advantages, you have a very small capital outlay, which is basically the security deposit really and maybe the first rent. You also have a lower risk because same as the HMO, most of them are occupied and only one empty, you still get rent rather than being totally empty. The downside is, of course, because you don't own it, you also don't have any potential or upside for capital appreciation. Take note that in most countries, including Singapore, if you want to sublet, you must get your landlord's consent. So you must ask whether you can sublet this unit before you rent it, not after. Right? If you cannot, if the landlord says, no, I'm not comfortable with that, then you ask somebody else. But I believe in this market, landlords also become more flexible and happy to rent rather than sitting on an empty unit. And if you're not, then ask someone else. You sure find something. So in the end, what you have to do is generate positive cash flow. Let's say you have a 4-bedroom unit that costs you 3,000 a month, and you can rent out each room for 1,000 each, which is 4,000. Then you make $1,000 profit for simply doing pretty much nothing except managing tenants, collecting rent. But even that you can outsource to a management company if you don't want to do it yourself. So that's the advantage of these strategies. Arthur. Now you can combine these two. Also in the service office, right? You don't have to buy the office and rent to 8 tenants. If you have cash or can get a loan, you can do that. You have capital appreciation upside. But if you can't or don't want to, you can just rent this office and sublet to 8 different subtenants. So the combination of the multi-let strategies with the rent-to-rent gives you this one in the commercial market. I also know people who do that right here in Singapore and Australia and UK. It can work in any country that you choose to invest in. You simply need to take note of the legislation there. The law might be different. So do your due diligence first. As said, I can help you with that if you want, or if other people can help you too. But don't try it alone. Now, one of my all-time favorite strategies, and that is getting really exciting in 2021, is this one. We call it politically correct, motivated sellers. In other words, it could also say the distressed sellers or distressed properties. In plain English, it means they are desperate. Why are they desperate or motivated? Because they have some financial challenge. Due to the crisis and the lockdowns in many countries, whether it's Singapore, Germany, UK, other European countries that had lockdowns, many businesses struggled. They might be kept alive financially because they still had some cash reserves from the years before, hopefully, as well as government aid or support to a certain extent. But most countries have stopped that in this year, and eventually they might run out of cash and fold. That means as well for the office market as well as the residential market, because those people who work there become unemployed, right? That potentially they might not be able to pay the mortgage anymore, lost their job, they're desperate to sell. Now, if you want to buy from these sellers and you think, oh no, you know, they're already in trouble and I don't want to do that kind of thing, think again, because somebody else will. And actually, they want to sell the house cheaply before the bank comes knocking on the door and forcefully takes it away. So it can actually help them and help yourself for getting a cheap property at a great price that is way below market rate. So distressed property can mean very bad condition. That works all the time, has been working nicely for the last 100 years and will still work. But distressed sellers, this is particularly, I think, interesting in 2021 because we will see in many countries a lot of distressed sellers for financial reasons. In Singapore, maybe less so because the MIS as last year made a ruling that people don't need to pay the mortgage if they don't want to. For this year, it's a reduced mortgage payment in order to cushion this blow. So there won't be that many options, most likely in Singapore, but there will, and I'll show you in a moment. But in other countries, this where the central bank or the government does not do such help, there will be fantastic opportunities coming up where you can get good value properties in great locations, really, really great price. Then you gotta take it because this is only a one-time opportunity. This property only gets sold once for this price, right? There's not 10,000 units available or anything like that. So that's what I mean earlier. Procrastination leads to no destination. If you see the opportunity, it will get taken. Either you do or someone else. Maybe me do. Who knows? So you can buy the property before the option from the seller directly, or if that doesn't happen, at the option itself. But always check, because property sold at auction, there's certain terms, conditions. You cannot say later, oh, I didn't know that, or that I didn't see the property, now it's different. In the auction, you have no such claim. Be aware of that. But it's a great, great opportunity to buy property below market value, and often significantly below market value. Why is that so? Because the bank basically doesn't want to make profit from the auction. They just want their money back. So if, let me give you an example, you have 1 million property and the owner owes the bank, let's say 600,000. The bank gets 600,000 in the auction. They're happy because that kills the mortgage. They got their money back. They're happy. They don't need to make a profit. So if it goes for 600,000, you can get it at 600. You just made a 400,000 paper profit, and then you can either rent it out or keep it and wait till the price is over, whatever the case might be. But later, you can definitely sell it for a higher price. If the bank gets 700, okay, it depends on how many people bid for it, right? But 700 for a million is still a good price, right? 30% discount. That's why this is such a good opportunity. And for this year, there will be many more such options coming up. Beware of the pitfalls. As I mentioned, consult a professional before you buy property at auction. This is an example here, a couple of examples. This is my mailbox that, or rather my folder in my mailbox, where I save some of these auction properties. And you see, I don't know if you can read it here on the screen, but 14th of January, that was 2 days ago, 11th, I didn't save all of them, some I delete. But basically every few days, I get the opportunity right into my mailbox. So if you want to get these opportunities right in your mailbox, what you need to do, how much you got to pay, how much is this information worth to you? Nothing. It's free. I just put you on my mailing list, and once you find the right opportunity, then we can discuss how you avail of it. So just contact me if that's something that might be interesting to you, and I'll be happy to help you in that respect. Totally free, no charge, no obligation. You don't have to buy anything or do anything, honestly. I just can help you to potentially find the right opportunity. And I have similar things in other countries, in the UK, notably. I myself did buy an office in Glasgow at an auction before. Right? So it's not a theory. I do it. It's my own money. I got experience in this. And I'm not just somebody who just talks about it. I actually do it myself with my own money. But important is that to take action, as I said, procrastination leads to no destination. Just thinking about it how much profit will make them thinking about it to zero, right? So think about what is it you want, what is your preferred market, what's your risk appetite, what is your financial situation, and consult me or another professional to help you. But I really, really hope it's always my goal to help people to make the right investment, to get profit for them. That makes me happy. I know how it's done. I've been doing it for more than 20 years myself, and I'm happy to share my experiences. As I said, I promised you earlier, there's nothing for sale here. I'm not going to sell you any property now or any opportunity or my course at a discount. No, this is simply sharing with you. So I thank you all very, very much for attending this webinar. If you have any questions, please get in touch with me. We still have a few minutes. We can have a quick Q&A as well. And for those of you, I promised at the beginning how to get my Property Apprentice book for free. This is the link, actually www.thepropertyapprentice in one word.com/free book. You only need to pay a couple of dollars for the postage in Singapore anyway. And then my book will be in your mailbox in a couple of days. So thank you all for attending very much. And please like my YouTube channel or subscribe to my webinar service so that you get notified when I run the next webinar. I hopefully see you then. I wish you all the best. Thank you.